Good morning, everybody. Hey, welcome to Tuesday, September 22nd. After quite a run yesterday, not to the good side, but to the downside. We'll talk about that with Dave here in just a few moments. I hope that your Monday was well, other than what the market's provided for you. And remember, if you don't know what your risk number is, it's really important that you have a financial x-ray. Give us a call and let's schedule your financial x-ray, 863-382-0037. Again, that's 863-382-0037. Hey, I look forward to speaking to you soon. Dave and I will have a conversation about what's going on this week in the markets.
Oh, .7 Light FM, no doubt there. Good morning, it's 8:37 now. That's 23 before 9 if you're still on analog. It's time to check in on your finances and see how Wall Street's doing this morning. Not a good day yesterday by almost any measure. Let's go downtown to the offices of Statler Financial Services and see what's happening this morning. Phillip Statler is standing by. Not a good day, especially on the Dow yesterday, was it, Phillip?
It was not a good day at all for the Dow. It was, and even the S&P 500 had a pretty rough day. NASDAQ squeezed out a slight loss, and I say slight compared to all the other things out there. They actually ended up pretty good.
Yeah, really. In a day and age in which 100-point swings are considered a slow day, 509 points down on the Dow yesterday. That's enough to get anybody's attention to get into. That was 1.84% off. S&P, relatively speaking, was better off. They were down about 1.2%, or down 38 points. And as you said, the NASDAQ, 14.5 points down, sounded kind of paltry compared to the other bloodbaths. And we kind of write it off to two factors, I suspect. The biggest one being one of our biggest trading partners over in Europe. They're locking back down. They're seeing a second wave on the corona bug, aren't they?
Yeah, they are. I mean, I saw an article by Boris Johnson on the UK, and he's really and truly getting out there on the British front saying, look, you people need to work from home. There's too much of this virus is ticking up right now, and we need to take that seriously, starting to close bars and things earlier than they used to be closing. And so we'll have to wait and see how that ends up happening there. But that's just England. We talked yesterday, I think it was, a little bit about Europe as a whole. Their cases were increasing again. So you would expect to see a slowdown, a cutback, a stay-at-home lockdown coming from Europe also.
Understood. Now, the fact that it's Boris Johnson over in England as well, because fairly or unfairly, Johnson has been typecast in the world press as being a Donald Trump clone. He's been the populist. He's been the hey, don't worry about it guy as far as this. Now he's among the first ones to say, okay, guys, clamp down now and get it over with. I think maybe the person who actually did the first clamp down to the bunch might very well have had a bigger impact than the fact that it's happening.
Well, that's true. And let's face it, he had it, right? He had the coronavirus, and he got pretty sick. So, he really does know how serious it is.
Absolutely. That's one of the things that a lot of the naysayers are saying. Oh, mine, it's just a case of the flu. But ask Boris Johnson. It's no fun to go through. And I think he was in intensive care for a while even.
I believe so, too. I mean, I know he got really sick, and it's taken him a while to rebound. But, the one thing I think that we all have to kind of realize is that the coronavirus is going to be here for a while. I mean, it's not going away. And so once the vaccine gets here, hopefully that is going to help knock it back down. But like the flu comes every year, I think that we can expect that this is going to be around for a while. We have to learn to live with it.
Absolutely, and they're trying to figure out how to live with the second wave over in Europe, which certainly didn't help our stocks with a lot of international positions in them yesterday, indicated by the Dow probably being the biggest drop of the bunch percentage-wise. The other thing that gets into the equation is yesterday the Federal Reserve announced that they had purchased $8.3 billion in exchange-traded funds dealing in corporate bonds, and you and I were chatting about it before we went on the air. Both of us were kind of queasy about the notion of the Federal Reserve buying into corporate bonds, but both of us kind of turned up our noses into a holy crud over the idea that the Federal Reserve now has an 83% share of the outstanding shares in at least one of the corporate bond funds out there. That kind of puts the federal government in a driver's seat that's not really something we're accustomed to, is it?
Well, that's true, and that does lead you to think, okay, how is that going to work out, and what does that really mean to us long term? And I'm not sure. I mean, I'm reading a different article probably than you were reading, but I'm not so sure that they actually own that much. Versus that's the percentage of inflow into that fund they had over the last 3 months.
That would feel a lot better to me. I was looking at the top headlines, but that's still an amazing share of inflow into the funds as well. I mean, I was seeing 31%, 41%, 63% of the purchases in those bond funds. I'm sitting there saying, holy crud, what's next? Are we going to start having the government buy stocks?
Well, and unfortunately, that could be the next thing that comes up, and that is scary, right? I mean, that means the Fed could really start controlling markets, and I don't think any of us want to see that happen.
No, that was my biggest qualms when we were talking a few years ago when President Bush proposed that a portion of Social Security go into the stock market. That's not a bad idea to increase the yields, but then the other side of that coin is suddenly the federal government is kind of calling the winners and losers in markets, and that's not something that, to sound jingoistic about it, that's not the American way.
No, it's definitely not. That is not the way capitalism really was meant to work out. You know, you got to take the gains, you got to take the bumps and the losses too.
Absolutely. We talk about all the pundits, so we got to throw out a pundit that's got the contrarian view to the kind of bleak picture we've had the last couple of days. Jim Cramer says the end of the sell-off is here, and he expects everything to turn around. I'm not too terribly sure of his track record, but he's got a mighty big mouth.
Well, you know, that definitely goes contrarian to what I'm reading in a couple of headlines, that this could be the beginning of another little bit of a downturn for a little bit. So obviously we hope he's right, but nobody knows. Nobody's got a crystal ball.
Absolutely. I bring that up primarily because it is so contrary to what you and I are both reading on the rest of the pundits out there. And Cramer's not known for being a follower, is he?
No. He likes to get out there in front.
Sometimes in left field, even for that matter. But he's definitely out there now saying, "Don't worry about it. The sell-off's over." So if you follow Cramer, everything's going to be fine. Had a couple of reports out, and one of them is right at the top of my winner list this morning. So I'm betting AutoZone had a good quarter, didn't they?
They really did, Dave. They beat by almost $6 a share, and let's face it, they're an expensive stock, and so they have a pretty high earnings per share. They came in almost $31 a share for their earnings, expected to be about 25. Revenue was also ahead of forecast. Same-store sales more than doubled their estimate with an increase of almost 22%. But I find this interesting. They're still uncertain on these market conditions and heading into their new fiscal year, what that's going to mean for them. So obviously no guidance from them on this next fiscal year. And AutoZone is getting a nice little bump up 4%, a little over 4% this morning. Still just a little bit shy, about $40 shy of their 52-week high.
They are one of the highest priced stocks in the market. They're running $1,237 a share right now. So when you see a 4% bump, that's a big dollar volume increase too.
Yeah, it is. It's almost $50 that they're up this morning.
Semi-interesting. That's one of the very, very few stocks that is given "we don't know what's going to happen to us" guidance, and still ends up being on the top of my winners list in the morning.
Yep. And so they've, I'm looking at their year-to-date numbers, and they've really had a good year. I mean, year-to-date they're down less than 0.5%, and year-over-year they're actually up 2.3%.
Cool. That's impressive stock. Any other reports that we've got out of the companies that are out this morning?
No, that's really all the actually earnings reports we have. I did see something I thought was kind of interesting with Oracle.
Mm-hmm.
Oracle, so this isn't a done deal with TikTok yet. I mean, I thought it was pretty much a done deal, but I guess China, the folks in China have to still approve the deal too. And they're not excited about Oracle being the other partner in this deal. So that one's going to be interesting to see how that works out, because that deal has not been approved by China yet, and they still have to approve the deal also.
That might explain why Oracle's on the top of my big loser list this morning before trading begins, doesn't it?
Yeah. The only other thing I have, and I don't have it coming out yet, it comes out I think probably at 10:30 this morning, is existing home sales. So we'll talk about that tomorrow morning.
I was going to say that's due out about noon today or 10 a.m., something like that this morning. I was watching for that, and I found out it was later on this morning. Resetting the table for the morning, it was a bloodbath yesterday on the Dow. At the very least, a slow bleed on the other two indexes. Dow down 509 points, S&P down 38.5, and the Nasdaq down 14.5 yesterday. While we've been talking, I know you shared with me one of the indexes kind of turned the corner before we went on the air this morning. How are we doing 45 minutes early today?
Better than when you and I first looked at the index earlier this morning. We got the Dow down 0.1%, down $26. We got the S&P 500 up about 0.15%, like less than $5. And we've got the NASDAQ up 0.6%. So a mixed bag there still this morning. And then we got a mixed bag on the commodity side too. We've got silver, you know, for all intents and purposes, it's a tad in the red, but it's basically even, like 0.06%. And then we've got gold up 0.25%. Crude oil is up 0.75%, but it's still under 40 at $39.84 a barrel.
Yeah, I think that's a little down from where it was yesterday morning at this time, taking morning-to-morning trendings, isn't it?
Yeah, I think it was, because I think it was back over 40 yesterday morning.
Yeah, just by a tinge of memory serves.
Yep.
World markets, Asia was mixed at the close early this morning. Europe is kind of getting a bounce after their bloodbath yesterday. Both England and Germany both up by about 0.5% midway through their day. Phillip, advice always needed to be able to cure the volatility that's out there. You can't fix the markets, but you can fix your portfolio. How do I find that to get those repairs?
That's right, Dave. Nobody knows what's going to happen in the marketplace. All that you can do, all I can help you do, is control the risk in your portfolio. And the problem is most people don't know how much risk they have in their portfolio. Give us a call and let's schedule your financial x-ray. That number is 863-382-0037. Follow us on Facebook. All you have to do is like our page, Statler Financial Services. Hey, you'll get a rebroadcast of this if you didn't get to see us every morning. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. to noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Where we stream it at newstalk730am.com. I hope by Saturday morning our streaming computer blew up over the weekend, but we'll get it back shortly, we promise. And back here again tomorrow morning on Light FM. Fair enough?
Fair enough, man. You have a great day, and I look forward to speaking to you again tomorrow.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Wait.
Hey, remember, I want to thank you for joining us today. Really excited to be with you. And here's the deal. There's a lot of volatility out there. And like I said a minute ago, the only thing that you and I can control is the amount of risk in your portfolio. So if you don't know how much risk you have, please give me a call. Let's walk you through our financial x-ray so that you know exactly how much risk you have in your portfolio and make it match up with your risk comfort level. Give us a call to schedule that, 863-382-0037. Or you can go to our website, statlerfinancial.com, and there you can schedule an appointment, schedule a phone call that we can sit down and talk and go through your portfolio. Have a great day. I look forward to speaking to you again tomorrow.